for the late start today. I was having some few technical issues. It's always the way, of course. You do something for a few weeks and it works fine, and then you come back to it, plug it all again, and suddenly it doesn't all work fine. So hopefully you can hear everything quite clearly and you can see what's going on. If you haven't attended one of these before, this is where we have a catch-up with what's going on in markets, what's been going on over the last week, some of the levels to watch over the next week, where the opportunities might be, all of that. So before we get started, for the sake of good order, let's just do a risk warning. Let's get that up. So spread bets offered in the UK only and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 85.24% of retail investor accounts lose money when trading spread bets and CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. All information that is provided during this seminar is for educational purposes only. The presenter is not a financial or investment advisor and is not authorized to provide recommendations on any instrument of any kind as part of this presentation. The strategies showcased are applied on hypothetical scenarios. Any instruments that are mentioned throughout are cited only for illustrative and educational purposes. This webinar is not intended to be a personal recommendation or an offer to buy or sell any financial product or instrument and must not be construed as advice from the presenter. Capital.com does not represent that the material provided here is accurate, current or complete and therefore should not be relied upon as such. Any information that may be provided relating to past performance is not a reliable indicator of future results or performance. To the extent permitted by law, in no event shall Capital.com or any affiliate or employee have any liability for any loss arising from the use of the information provided. Any person acting on the information does so entirely at their own risk. Right, that's that done. Let's take a look at the markets. It's perhaps something of a strange day today because we have got the US interest rate decision a bit later on, and as usual it's the press conference around that can often spark volatility in markets. So it wouldn't be surprising. We've had has it been a quiet morning so far? Reasonably quiet. If we have a look at something like the DAX, the German index, with that big move last night, but we've had a decent range on the DAX, I suppose, today, 100 or so points, 140 points. But we do have this US interest rate decision a bit later on. So again, not too surprising if we see markets perhaps marking a bit of time ahead of that. So that's something to bear in mind. But I still think there's some interesting stuff to look at for the rest of the week. You know, if we're stock market indices, let's start with that first of all. If we start with, let's have a look at the S&P 500. You know, this is a daily chart on the platform, and of course we had the all-time highs up here. Then we had markets full of a cliff, as we know, into April, and we saw it. You know, from low to high in April or into May. You know, the markets rallied something like 20%. You know, so we've seen this strong bounce back and cautious markets really since pretty much since May began, isn't it? We've seen fairly. You can see. Look at the ranges on the dailies. Here we go. That's the 4th, 5th, 6th, 7th, and that's today. You know, really tight ranges. And I think it's interesting up here. I mean, we do have that interest rate decision a bit later, so you know, who knows what's going to happen off the back of that. It'll be interesting to see where markets finish today. But you know, if the rally, this 20% bounce we've had off the lows, if that thing is going to run out of steam anywhere, then we've sort of been here. I'm sure I would have mentioned it last week. These old highs up around 5,700. You know, on the way down, the S&P was selling off. We had the bounce, sold off, had a little bit of a bounce into whenever that was, 2nd of April, early April, and then markets fell off a cliff again. You know, so if we were thinking about going short, then for me this is one area with stops perhaps somewhat above those old highs. You know, I'd have to say I still think we could get another squeeze higher from here, but let's see what the interest rate decision looks like later. If you flip this over to the hourly charts, you know, you can see we've had, let me get rid of the RSI for now, we've had a fairly cautious few days compared to what we'd had, you know, for much of April. So you know, interesting to see if these old levels do hold again. Like I say, at the moment I'd be expecting at least another push higher, perhaps another look at these old highs up at 5,700. But let's see how things react over the interest rates decision this evening. So that's that. If we look at the Nasdaq 100, a similar thing there in that market. We've had the bounce back, and again, it's been a big bounce. The level on the Nasdaq, those old highs is up around there. 20,360, about 400 or so points higher than where we are now. And again, that Nasdaq, what was the low in April? 16,300, let's call it. We've been through 20,000. So we've seen almost a 400-point rally. That's like what's that? 25% rally in the Nasdaq off those lows. So we've seen the strong bounce back. And the question now is, and the reality is nobody knows, we'll see how these markets trade over the next few days. Are we going to see these old highs taken out and markets go back to the all-time highs? Which I think, sort of 5 weeks ago would have seemed a bit ridiculous given how fast markets were falling. Or do we see it fail again and it turns down and goes back to those lows? And I think that's the scenario at the moment. Is this downtrend that's been in place since Feb still in force? And we see the markets turn lower. If we take a look at the RSI, it's not quite overbought, but this is a 10-day RSI, but it's back up to levels we were at when markets were rolling over earlier this year. So I think we've got an interesting few days ahead here when it comes to US stock market. So I still think it wouldn't be surprised to see a bit more strength, but we need to be aware of these big levels. I think what's more interesting at the moment, take a look at the DAX, the German market. The DAX, and we'll have a look at the Spanish index in a minute as well. European markets are doing better than their US counterparts. But the DAX, the all-time high in the DAX back in March, so only a couple of months ago, was up around 23,477. Yesterday, the market traded as high as 23,427. So we came within 50 points of the all-time high. If you think about everything that markets have been through the last couple of months, and here we have, a major European index, the German DAX, up at pretty near all-time highs again. So I think that's interesting. The DAX has been a stronger market. I've traded it quite a bit in the last couple of weeks. I didn't manage to get on the last of the run up last week. We saw a sharp sell-off in the DAX. Was it yesterday? As recently as yesterday? Yeah, it was. When we had that, was it the German Chancellor failed to get voted in on the first vote. So that was yesterday's open on the DAX. So I flipped this over to a 5-minute chart now. So the market, first thing, was around 23,427. And it traded down to 22,857. So the market moved 550 points, high to low range yesterday in the first sort of 2.5 hours or so. So it was a bit of a wild day, to say the least, on the DAX yesterday. But it's bounced back strongly, and that for me is something that shows there is real strength, for now at least, in these European markets, and that's what the trend on the DAX looks like. So for me, even though I think US markets may well push higher again, I think I probably prefer a trade on the DAX at the moment. But for me, there's not much point in over-committing until this interest rate announcement later on today is out of the way. So perhaps something of a quiet afternoon, and then it'll get a bit more spicy when the US rate decision comes out. And just one final European market is the Spanish index, the Spain 35. Again, a very different makeup to US markets. I did look last week at the companies that make up the Spanish index, the 35 companies. I must admit, I only recognised about 10 or 12 of them. But the Spanish index yesterday, this is the daily chart, moved briefly to fresh all-time highs. And again, who'd have thought that, a couple of months ago, that when we saw these markets really start to sell off, that it would have bounced back that strongly. So what's the Spanish index done? The low in the Spanish index was 11.2 from April. And here we are, not far away from 13,500. So we've seen, again, it's a 20% bounce back, in the Spanish index. So I think this is an interesting one to see. Do we get a breakout to all-time highs in the Spain 35 And then does that bring in more buyers? We have the whole FOMO thing, fear of missing out, and the index moves higher. So for me, obviously I look at US markets every day, but I think the European indices are perhaps a bit more interesting at the moment. But let's see how things are after the US rate decision tonight. And for sake of completeness, let's look at the FTSE. So the UK's FTSE 100, again, of course, we've seen the bounce here. All-time highs are up around about 8-9 on the FTSE. So about 350, 400 points away from where we are now. Again, the FTSE again is quite a different makeup to other markets. More defensive, all of that. And there's an argument for being a buyer of the dip in the FTSE. It did manage very briefly. Actually, that's in the overnight market. It did hit a fresh recovery high. But again, an interesting one to watch. I must admit, I don't trade the FTSE that much. I think for European indices, I prefer the German DAX. But again, interesting to see what happens here. So overall, DAX trend still up. Are we going to see the move to fresh all-time highs? Interesting to see what happens up there. And of course, the flip side, because there's always an argument to be a buyer or a seller. If you thought that the bounce back was overdone and these markets were going to tank, then this run back up to the old highs, could be the perfect shorting opportunity if someone was so inclined, because if we think that bounce is overdone, then if it's going to run out of steam anywhere, here we are. So I think it's an interesting week ahead for stock markets. Let's see. But for me, the DAX, I'd still be a buyer of the dip. The Spanish is interesting to see if we get the break to all-time highs. US markets have slowed down a bit this week. I'm keeping an eye on these old levels that we saw on the way down to see if they're a problem. I wonder if we'll get a push back up again. Let's see. So lots to watch and plenty of volatility potentially later on today when we have the US interest rate decision. Let's see what that brings. Okay, let's take a look at some other stuff. Let's take a look at gold. I mean, gold, of course, we have had something like, a perfect storm for the price of gold, haven't we? I think I was talking about it last week. What have we had this year? We've had everything. We've had some political shocks, some shock political decisions, should we say, coming out of the US. That's one thing. So political uncertainty is good for the price of gold. Economic uncertainty, the concern that tariffs are going to have on the world economy, a weakening US dollar, and falling stock markets. This is, it's like 4 Christmases all at once for the price of gold. And that's why we've seen it so strong, traded up to 3,500, I think, pretty much almost 3,500 on Capital's platform, 8 cents shy of it a couple of weeks ago. And then that big trend is still up. And again, it's one of those things, yesterday, the price of gold yesterday traded up to 3,435. So came within $60 or so of the all-time high. If you thought, well, this run in gold is ridiculous, gold should not be up here, then, one approach would be to be a seller of the strength with a stop above that all-time high. Me, as a trend follower, I want to be a buyer of the dip of gold. So I think the problem, if I was a buyer up here, let's just tidy this up a bit. If I was a buyer up here, where it is now, this is the hourly chart we've flipped over, is where does my stop go? And these old lows did a good job. So these old lows I'm just got to tilt my screen down, from mid-April, did a good job. Around about 31.85, you can see it came back to it beginning of the month, and we've had a couple of $100 rally off the back of it. So if I was a buyer of gold at the moment in the short term, I'd still want my stop probably the other side of those old 31.85 lows. So a dip is interesting to me to be a buyer. If it breaks out, if we do get another move to all-time highs for gold, and like I say, it's only where it's trading now, $100 or so away from it. So it's not far away from it. I'd revise my view and look to have perhaps a different stop. But interesting to see what happens again here, with the gold price after what has been an incredible year for gold, thanks to all the stuff, the fundamental stuff that's been going on this year. We've seen gold have a great year. So that's that. That's gold. Silver, I think, is still a little bit boring, I'd say. We had a multi-year high in silver back here in October of last year. Had a multi-year high for silver, and it's never managed to break it since so far. So 7-8 months on, we haven't seen silver manage to get past this level. Okay, so a little bit sideways, I'd say silver. Not too exciting for me at the moment. I think what is an interesting market for the rest of today is oil. All right, so it's been quite the week for oil. Let me just flip this over to like a 5-minute chart, because we had what's known as a gap opening on Sunday night when markets resumed on Sunday night. So here, this little candle here. Let's zoom in to make that clearer. Let's get rid of the RSI as well. So this candle here, that was Friday night's close. So the market closed around $58.20 a barrel for the price of oil. And then over the weekend, there was the announcement, I think, from OPEC about increasing production. And of course, supply demand, if we have more supply in the market, then, from a basic economics point of view, that should put the price down. If there's more of a thing, the price should go down. And so that's why we had this gap opening on Sunday night. So the market opened around $56, just above $56, after closing above $58 on Friday. So there was a gap, $2 gap, as the market adjusted to this news that had come out over the weekend. But what's been interesting since then, so that's the gap open. This is the first 10 minutes on Friday. The market, the oil price, trades as low as just above $55 a barrel. But since then, if I can bring things a bit back up to date, we have seen it recovering. So now that very much looks like the bargain price, because the price of oil did touch $60 this morning. So we've seen a $5 bounce off that opening low this week. And I think it's an interesting market for the rest of this week, because for me, that recovery trend in oil is still going. So off that gap low, there we go, gap low on Sunday, that trend is still going. I think it's quite interesting at the moment that it's sort of pushing through these old highs from earlier in May, about $60. So that's showing some strength. So basically, in a nutshell, I'd be a buyer of oil. I think, obviously, this is not financial advice, it's just my opinion, and I don't have a crystal ball. I'd be a buyer of oil, assuming this correction we've had over the last few hours has finished. So I think that's a really interesting market to watch for the rest of the day, when other markets might be a bit sideways and just waiting for this US interest rate decision, what happens with the price of oil. But that recovery off that gap opening in response to the OPEC news is still going. So an interesting week for oil. Let's see, can it push into the 60s again from here? So perhaps an interesting few days ahead. If you take a look at natural gas, I find it, it's an odd market, natural gas. It's really volatile. I'm going to sneeze, so excuse me for a second if I break away and sneeze. So if we take a look at natural gas, and looking at the chart like this, perhaps doesn't really tell the story of the volatility, but it was only in March of this year, natural gas traded as high as, what was it, 490. So the best levels for a few years. And that was in March, early March. By late April, the market had sold off to down to 3. So it had dropped, what's that, $1.90. So almost 50%. Let's call it 40%. It's a big move. That perhaps, so it is a volatile market, and it's a market where I think, I've not traded it for a while, natural gas, but it's a market where I think we need wide stops if we're going to trade it. But anyway, what I thought was interesting, this sell-off, has held so far above these lows that have been in place since November last year. So 290, let's call it, on natural gas. And we have seen, a half decent bounce over the last couple of weeks. So for me, it's perhaps now all a bit sideways for the last few months, but any weakness back to 290, I'd be a buyer. I don't know what I do at the moment. It's sort of a bit in the middle, isn't it? But you could absolutely, this is the hourly chart now, you could absolutely argue that trend, that shorter term trend, is still up, and be a buyer and figure out somewhere to put a stop. But I thought, I don't trade it much myself, like I said, but I think it's interesting that the 290 lows held for natural gas. But I think oil for me is the more interesting market this week. Bitcoin, there's a few requests for Bitcoin in the chat, so let's have a look at that. It's had a good run, hasn't it? Looking at this last week, we've had this big trend that's been in place, going back to December 22. now. So we've been in this, for more than 2 years now, the big trend for Bitcoin. Then, of course, it accelerated off the US election last year. And it's all been a bit sideways and sort of drifty since Jan. We've broken out of that downtrend. So for me, I am, based on the long-term picture, absolutely be a buyer of Bitcoin. The only question is, would you want to buy it here? I think that's the question. And who knows? The argument for buying it here, well, look, it's been going up for a month. And as a trend follower, the trend is up. So bang, got to be a buyer. The question I'd have, where's my stop going to go? For me, I would still want my stop based off the daily chart. A stop the other side of 74,000, these lows we saw only a month ago, don't forget. So for me, that's what I would do. And is 110 going to be a problem again? So for me, the risk reward doesn't really stack up. But if we saw a sell-off in Bitcoin, it starts to look a bit more interesting. Let's take a look on the hourlies. We've had that sharp move, haven't we? What was the move then? So last night, at 10 o'clock last night UK time, it was about 94.6 and it traded up to 97.6. So we had a $3,000 move last night. I'm guessing, was that on the India-Pakistan thing? I'm not sure. I'm guessing that's what was the driver there. Let's see. Anyway, so overall, absolutely long-term trend up. If you looked at the last, where are we going back to there? The last few weeks, it's all a bit sideways. I think it's interesting if we get a dip because 74 has been such good support. So interesting to see what happens. And again, if it broke out to fresh all-time highs, I'd then look at buying, but with a tighter stop. But at the moment, I think it's perhaps still a little bit too sideways in the great scheme of things for me, but absolutely that big trend is up. If we take a look at some of the currencies, I think these are still, against the dollar, still boring markets, and if we look at this market here, the dollar index, DXY, you can see why. The dollar index has been in a big downtrend since the middle of Jan. So middle of Jan, the dollar index was almost 110 and traded as low as 97.5 during April. So it lost 113 points, so it dropped about 12%, the dollar, against a basket of world currencies since April. And since then, it's been just a fairly tight range. So we're seeing, if we have a look, we'll have a look at pound against the dollar in a minute, then we'll see. So even though the pound's had a good run because of dollar weakness, because the dollar's a bit flip-flop at the moment, we're seeing the same thing in these other markets. So for me, you, as ever in trading, there's often the argument to either be a buyer or a seller. I don't think anything is ever that clear cut. The argument for being a seller of the dollar, well, the trend is down. Yeah, the market has been sliding since Jan-Feb. We've had the rallies along the way. Ultimately, they've come to nothing. We've had this rally that's been going on for a couple of weeks, and even that started stalling over the last week. So that's the argument for being a seller of the dollar. The argument for being a buyer of the dollar, we're down at what has been, going back a couple of years now, historically big lows for the dollar. Yes, it did slip through it in April. We haven't really seen much follow through since that sell-off. So is that something of a false break and we start to see a recovery in the dollar for the rest of this year? Let's see. I think that's an interesting trade. It's a bit of a contrarian trade, that, to be a buyer with a stop under that recent low from April and see if we do get a recovery, because we haven't really seen it fall off a cliff. But yeah, it's all still a bit up in the air. If you look at something like pound against the dollar, there you go. You can see it here. That's the daily chart, pound against the dollar. So it is trading at its best levels since September 24 and back at levels not seen since March 22, so 3-year highs. But with the dollar flip-flopping around, then of course pound against the dollar has all been a bit sideways at the moment. And again, so the flip side of that dollar trade, if you wanted to buy the dollar index to see if it recovers from here, if it does recover, the likes of the pound against the dollar and euro against the dollar, it's going to slide, isn't it? So let's see what happens, but nothing too exciting. And there's euro dollar, same sort of thing, yeah. So euro against the dollar hit a multi-year high when that dollar weakened. There we go. So the euro hit its best levels since 22, but with the dollar just flip-flopping around the last few weeks, nothing much exciting going on in euro US dollar. So that's it. So someone mentioned palladium, and I'll have a look at those. I think, for me, I mean, palladium's an interesting market. It's been a great market in the past for me. You've got to go back a long way. I'll show you. Was it 2019, 2018, 2019? Here we go. If we flip it over to a weekly chart, absolutely brilliant trend. Yeah, back then. There we go. So 2018 into 2019 and into early COVID. You know, the price went from about 850 up to 2,800. And I was trading it back then, and it was a dream to trade, because it's one of those ones. So the easiest trades are the ones where you get in, and the market basically just moves in a straight line week on week. So that was good. But since then, it's been really messy. And I think for me at the moment, I still think it's a boring market, palladium. Okay, it's had a move yesterday. We can see that yesterday, a bit of a move yesterday. So it went from 936 to 972. So what's that? Let's call it $40. It's still only, what's that? 5% move, 4%, 5% move yesterday. So, okay, a bit of a move yesterday, which is quite exciting. But in the great scheme of things, it doesn't change much, does it? Or not for me anyway. Looking at the dailies now, you know, I would say, for me, with palladium, we're still in this sort of drifty move that it's been in since November last year. That's my thought. So absolutely, in the short term, it's strong. But, you know, whenever we've had rallies on palladium over the last 6-7 months or so, it's run out of steam. So I think it's interesting to see. So I think, you know, absolutely, it could have a bit more, my view is, a bit more upside to run. But I'd just be a bit wary of these old levels in the past where ultimately, you know, the buyers run out of confidence. Sort of let's call it 1,000 up to 1,050 most recently. So my thought is, okay, it's had a good day yesterday, palladium, but does it actually change the bigger picture? And for me, no, not yet. You know, it's just still a bit of a drifty, boring market for me. So let's see what happens. Let's come back to it next week and have a look and see what happens then. Someone's mentioned gold. I did look at gold earlier, but I'll do it again, as I'm such an amenable person. The big trend is up in gold, so I'd be a buyer of the dip. For me, the only question is, where would my stop go? I'd rather have my stop below 31.85, so a bit of weakness in the gold price, and I'd like to be a buyer. The flip side is, if you thought the price of gold had gone too far, then selling short with a stop above the old highs at 3,500 would make sense. But we did have a look at that a bit earlier on, so that is there in the recording. And that's it, really, I think. So it's a bit of a strange day today because why? Because we've got this US interest rate decision a bit later on. So it wouldn't be surprising to see, you know, a fairly boring few hours in markets. But, you know, I do think, for me, the European markets are the most interesting, because we've got strong trends in the likes of the DAX, you know, and it snapped back really sharply yesterday when it sold off heavily first thing. You know, we've got the Spanish index not too far away from fresh all-time highs, so that's a show of strength. And then to come away from stock market indices, we've got the price of oil that had this gap opening earlier this week and has been in recovery mode all this week. And does that recovery continue? And we see it push back into the 60s again. So even though it might be a bit of a dull afternoon, I think there's a few bits to look at there. Someone said corn and wheat. Let's have a look at those. They'll be a bit different, won't they? Let's have a look at those markets. I think they're a bit. I think wheat is in a longer term gradual downtrend. But let's have a look at these two to make things a bit different. Let's have a look at wheat first. I think that's been drifting over the years and stages the odd recovery now and again, and it runs out of steam. Let's have a look. Yeah, there we go. So there's the price of wheat. Look at that. So wheat prices, March 22, 1,420 whatever a bushel, and they're almost a third now compared to what they were in March 22. 3 years ago. So for me, it's, there does seem to be a baseline, doesn't there, for wheat, around about here. 527, let's call, I don't know, 525, 530, whatever. So I suppose you could take the view, if you thought you were going to take a longer term position on wheat, we are down at what has been a historical low for wheat around about here. It's trading 541 at the moment. So if you thought, well, actually, there's maybe we're going to see wheat above 600 again, then there's perhaps an interesting longer term trade down here. But in the great scheme of things, it is all a bit drifty, wheat. But we can see here historically the market has seen value down here. But these rallies, they're getting smaller and smaller, aren't they? That's what would make me a bit worried. But it's an interesting level, interesting lows down here. If you look at corn, I think I did wonder earlier this year, and I should have bought it and I didn't, and I wonder if there is an opportunity in corn, because there's, again, we've got a big longer term downtrend in corn, and just the strength we had end of last year, beginning of this, is this the sign of corn turning around? So actually the trade I would do on corn, I'd be a buyer. There you go. So I'd be a buyer of corn. So we had this uptrend, right? So we had an uptrend, blah, blah, blah. The market fell off a cliff. I wonder if is that tariff based or is it something else? I don't know. Traded down to about 440, and so far 440 has held. So for me, I think that's quite an interesting speculative buy in corn, and I would put my stop somewhere beyond 440, perhaps quite a bit beyond, perhaps the other side of 420, to try and stay out of the noise in this market and see what happens next. And if I was looking for a target, then my first target would be a run back up to those Feb highs around about 510, 515. So it's an interesting market, I think, corn, just because we'd had this big downtrend for years. And are we seeing that turn around recently? Yeah, so I think that's an interesting one to watch. So that's an interesting one to end on, isn't it? I think that's one we haven't looked at before. We'll take a look at that over the next couple of weeks or so. So I'll be back next Wednesday, and we'll take a look at all this again. If there's any stuff you want looking at, you can always fire it in the chat. But I think there's plenty to watch today. Yeah, the price of oil this afternoon. Do we see the recovery continue? European markets, because they're showing a bit more relative strength than the US markets. Then we've got that US interest rate decision tonight. I can never remember when it is. Is it 7 o'clock or 6 o'clock UK time? Whatever. The decision comes out, and it's the press conference half an hour later. And it's the press conference, I think it's half an hour later. It's the press conference that often causes the volatility. So we could see a bit of an exciting last couple of hours for US markets tonight once that interest rate decision is out the way. So we'll see. We'll see how markets are then. But we'll wrap things up there. Thanks for coming along. We'll do this every Wednesday. If you're not subscribed to the YouTube channel, if you could subscribe, if you could click like, if you find it useful, all the usual YouTube stuff. But I'll see you all next Wednesday. So until then, good luck with your trading. What's going on there?